Webuy, a leading AI-driven e-commerce and travel platform, has provided an update on its NASDAQ listing status and ongoing strategic growth initiatives. The company received a delisting notice from NASDAQ due to non-compliance with the minimum bid price requirement, resulting in its shares being traded on the OTC market. However, Webuy has formally appealed the decision and is scheduled to present its compliance plan at a hearing. To address the bid price deficiency, Webuy shareholders approved a reverse stock split with an approved ratio ranging from 1:4:10 to 1:4:40. The board of directors approved a 1:4:40 reverse stock split, and the company filed the required documents. However, due to the shares now being traded on the OTC market, additional approval from the Financial Industry Regulatory Authority, FINRA, is required to proceed with the reverse split. Webuy has submitted its FINRA application and is expecting clearance. Despite the procedural challenges, Webuy is still actively expanding its AI-driven business model to drive growth. The company successfully raised funds in a registered direct offering, which will be used to enhance its AI-powered solutions across e-commerce and travel. This includes enhancing the AI-powered travel consultant for personalized itinerary planning, improving predictive demand analytics, and strengthening community engagement through AI-driven tools. Webuy states remains committed to regaining its NASDAQ listing and executing its AI-driven growth strategy to create long-term shareholder value. For more on stocks and crypto, follow Ascencore. Thanks for watching, and have a nice day.